Hey guys, Marty Boots here. Today I just want to make the fourth video in the moving average strategy series in relation to the bottom of a market. Um, someone in Discord chat asked about ICX, and it made me realize that maybe I should make this video. Now, although there is bottoming action here on ICX and possibly a bottom is in, there is some concerning factors that I want to take a look at. There is good signs. First, we have good volume. The volume is very good, and we're trying to break above moving averages. Also, in the higher time frames, the monthly and 3 months and stuff, there is good signs, positive signs of good candles, and even here we formed higher highs. For the first time in the bear market, we found we've broke through support, and now we've back tested it. And potentially this will hold, and maybe we can go higher. But what I want to talk about is the 50 weekly moving average. What I should have explained in my other videos is this is crucial, and for a bull market, price needs to get above the 50 moving average. Well, 50 EMA I'm using, guys, and this is crucial for good structure in a chart. Now, we could spike way up here, and people will think it's a new bull market. The structure is terrible. The structure of a chart is vitally important. Now, how you get above a moving average is very important. You can just spike massively up here, and it's just no good. Price needs to build and build and build some structure underneath price before it gets above a moving average, and you can see it's doing it here. Even on the 9 EMA, if you just consider this, it failed up here, but you can see here as price gets above, it's building better structure and better foundation here for getting above the 9 EMA. It needs to do that on the 50 moving average. There's no point in price spiking way up here because it's going to be a failed move. It's too much for price to ask generally in normal speaking terms, normal structure. Also, this EMA needs to probably come lower as price maybe consolidates here, and I don't know if price is going to roll over. You can see here on the Nasdaq, this is the Nasdaq in the tech bubble, when price rolled back below the 9 EMA, yellow 9 EMA and the green 20 EMA. When price got below those again, it did actually roll over, and we see new lows. Now, I don't know if that'll happen here, but I feel because of the 50 weekly moving average is so far away from price, I feel this needs a whole bottoming process, a couple of months, at least. Couple of months is only 8 candles. It just feels to me like it's maybe not ready to be buying this, because your money will be tied up, and there may be better opportunities in the meantime. I could be wrong about this, but first and foremost, it needs to hold this white line because it is support that was previous resistance, so it needs to hold that. But I believe we need some time. Now, the RSI is below the 50. You can see here price needs to be above the 50 to be considered bullish, and this is a good example here. Price did come up to it, it failed, and when we rolled over, price came up again, but where it consolidated. Look at this. This is important, guys. Oh, that's not the best trend line, but I don't have time to be messing about with that. You can see price consolidated here and made a bull flag underneath the 50 before breaking out bullish, and you can see we broke out bullish above the 50 weekly moving average. Unbelievably important as price broke above the 50 RSI. Unbelievably important. The 50 weekly moving average is crucial, guys, and to forming good structure. You can see here that was the end of the great. Oh no, that's not the Great Depression. That was the end of the tech bubble, the tech collapse. That was the end of it when we got above the 50 weekly moving average. Now, this is the Great Depression. This is the Great Depression, and I just want to talk about the bottoming action on it. I'll just put that there on 50 just to see. But the price action, you can see on the weekly chart, we bounced right up into the 50. But the price was so strong. This is a huge move, guys. This went from 40 to almost 80, almost 100% bounce in the markets, stock markets in a matter of weeks. Unbelievably crazy price action. But price needs to have a break, have a breather and rest, consolidate, because the move is too strong. And you can see where we dipped again, dipped into the 61% and even almost the 78%. But then when price got above the 50 weekly moving average, that was the end of the Great Depression. That was it over, all said and done. That was it done. Now this is the daily chart of it. When price gets above the all moving averages on the daily, this is a sign, a massive sign, critical sign that there is something brewing, that there is a potential bottom in the near future. Now, what happened? Obviously, we dropped down into 78% or 61% or whatever. We broke above the daily again. But when the daily breaks out above all moving averages and it coincides with the weekly break on the 50 moving average, massively important, unbelievable importance. Now, the confluence of both of these happening together is massive. The daily will normally get you in a little bit earlier than the weekly, but for a bull market, price needs to be above all moving averages on the daily and above the 50 moving average on the weekly. Crucially important. You can see the RSI here. The RSI started breaking above the 50, after the bear market. This is what we need as well. RSI needs to start getting above the 50. You can see there it continued above. I didn't even look at that, but I know it continues above on the 50. In a bullish trend, the RSI will be above 50. Can you get spikes lower? Of course, but the trend is above 50. The cloud. You can see the cloud here is honestly, I think most of these are bullshit. If you're down here in the Great Depression and you see the Ichimoku cloud and it puts you off buying, I just don't believe in these things. Can they help you? Yes, of course. But do you use it resistance here? Do you use it resistance here? Do you use it resistance here? Do you use it resistance at the top? For me, they're just crap. Anyway, I'm not getting into that. I just don't like them. Okay, guys, this is a very important chart and a few very important things to talk about. Extremely important things. Now, we can start here. Very importantly, you can see the first time price hit the 50 weekly moving average, we got rejected. This is where we are sitting at right now on Bitcoin. We are right here. So, the chance of getting rejection, it's very possible, and that does not bother me in the slightest. I'm very happy if we get rejected, and the sooner we get rejected, the sooner this market can bottom. So rejection is beautiful in my eyes. Notice this is crucially important, guys. Notice all the moving averages. Notice them converging in a cone shape. Notice this convergence into the pinnacle, into the peak. They're all converging in here, and price is obviously converging as well. This is what we have right now, and I've just extended these trend lines out, or these moving averages out. You can see them converging as well. But what is important, guys, is we got rejected the first time, but price needs to probably pull back or consolidate more in today's action to enable a bull market. To enable a bull market, price needs to get above all moving averages on the daily. And you can see down here, price did on the daily chart, which is not this is the weekly chart, but price broke out down here on the daily above all moving averages. But you can see here the confluence, and when the bull market really started, we got above the 50 weekly moving average. The two of these need to coincide with each other. It's massively important, and this is why I'm saying for a bull market in Icon, it's just not possible yet, in my opinion. For can this, maybe this can spike up to double in price? I don't know, maybe, but for real structure on a chart, you want to see this 50 weekly moving average down closer to price, so price can break above this. So for me, I'm not buying Icon here. I need to see better structure on the chart, and this is what I'm trying to explain to you. Proper structure on the chart. Price needs to be able to get above weekly moving averages also, for confluence and for strength, and for, this is structure, guys. This is real structure. And when price gets above that, it'll use this as support. You can see it back tested here as support, and it was after the races, and we were above moving averages. Vitally important. So the same thing is happening right now. We are above all moving averages on the daily, which is the first sign that this bear market is ending. Can we pull back 40%? Even maybe, who knows? I don't know, but that's just a throwing out a figure there, guys. I'm just saying, but it's still a sign the bear market is ending when we've got this. We can still have that pullback. Where are we going now with this? But price needs to maybe consolidate and drop, so it's potentially easier to roll up and get above the 50 weekly moving average. And this will coincide maybe with the second time we get above all moving averages on the daily. And it'll use this structure. This it's building structure here, guys. This is what it's doing. It's building structure, and then getting above the moving averages is confluence, and of a price trend change, so into a bull market. So it's already happening in my eyes. This is the beginning phase of the end of the bear market. Can we dip? Can we dip possibly down and test new lows? That is possible. I can't rule it out, but these are the first beginning signs that the bear market is over, or ending, sorry, bottoming process. Again, the RSI, vitally important. You can see here we peaked above, and it's still bear territory underneath the 50. We are just peaking above underneath the 50. Any consolidation or pullback, this will still be in bear territory. But you can see over here how it reacted. It consolidated in a bullish flag manner after a move up, sort of bullish flag manner, before breaking out. And we broke out, we broke out above all moving averages with confluence of the RSI breaking out into above the 50. And above the 50 you can see is a bull trend. Bear trend is below. We're still below. But we probably need to consolidate here for a month or two or whatever, and build good structure on the RSI as well, and to enable a breakout and continued a bull market. So I really believe that these dips are buying opportunities, and I hope it dips. I hope we go to 3,000. If we go lower than 3,000, guys, I will be surprised. Honestly, I will be surprised. I will I will probably like it. Part of me will like it because I can buy everything cheaper. Now, part of me won't like it because it's prolonging the bull market, maybe. But I will be surprised. We can go down and take out new lows at the 3,000, but if we start breaking down to 2,500, 2,000, I will be surprised. But I can't rule it out. Again, here is the daily market cap, and I think I wasn't supposed to be zoomed in here, so bear with me. Oh fuck, I just had a power outage, guys. I'm lucky I'm on battery here, but my TV is off. I don't know what happened, so I'm going to have to finish this video up and find out. Now, you can see the daily moving averages we broke above, obviously, after the second time. Price is the first time above all moving averages. Can we get that dip? It's very possible, yes, and I'll explain why. On the weekly chart of the total market cap, you can see here the first time we rejected off the weekly, we were building structure here, guys. This is all building structure. and we rejected. Now we are doing the same thing here, but we are building structure. We're building structure with confluence of converging moving averages. Now you can see the first time we hit this, we're getting a bit of a rejection. And if we continue to pull back, that's all well and good, that's great. But again, the vitally important thing, guys, a weekly moving average, weekly 50 moving average, price needs to break above that for confluence of a bull market. Now, that's confluence of the bull market. If we dip, we need to be trying to buy on the dip. But the confluence of the bull market is price breaking above the 50 weekly moving average, and it's breaking above all moving averages here. So this may need to drop lower, and price will have to base itself or drop or whatever to enable a break of these moving averages. Now, again, this could drop and test the lows, for example. I don't know, but or it might just stay steady, and then we'll break out higher. That is a possibility also, but we just need to watch. Again, very quickly, I don't want this video to be too long. 16 minutes. Fuck. It's very hard to get all. But the videos are long, guys, recently, because the content is so important in my eyes, because this bear market is ending and people need to understand that. But understand that we can still dip. I'm not ruling that out. But the signs are there that the market is bottoming. Now you can see here again, basically how the RSI acted. We got the rejection. The RSI is in an uptrend. Look at this. The RSI is in an uptrend. And working towards, you can call this an ascending triangle on the RSI, almost on the 50. And it's working towards breaking above the 50. We are doing the exact same thing, but we may need, it may need some time, because we got to pull back to it, and then finally break out above the 50, and this could be the start of the bull market. So it needs time, and we may need that pullback. So I mean, this is saying up in August, July, August, but obviously that's the breakout. But the lows will probably come in next month or June or something, in theory. So the break above the 50 is vitally important, but breaking above the daily will give you an earlier sign, but it needs to be on confluence with breaking out above the 50, just like this, and just like in the BLX here, just like the Dow Jones, the confluence breaking out together, the 50, oh here it is. So the 50 weekly and the daily need to be able to break out. This is why ICX for me is not ready to go into a bull market. Your money is going to be tied up, in my opinion. I just think that there's no structure here yet properly built, ready for a bull market. So sorry guys, I need to fly through these now. LTC is in a bull market in my view. Look at it, we've already broke out above the 50 weekly moving average. Now, can we pull back? Of course, definitely. Let me I'll just pull very quick fibs, and that's terrible because the computer's running a bit slow. But we can pull back, of course, and then maybe price will break out again above these moving averages, and it'll be off to the races with Bitcoin. But it's a good sign that this is already broken the moving averages, the weekly moving averages, because it has been a leading indicator in the markets. Just the quick examples here, above the 50 weekly moving averages, XRP, you can see the big spikes. Moving averages come down, converging. Finally, we break above the weekly. And I don't really like XRP here, but anyway, it's trying to find a bit of a bottom, but we'll see how that plays out. So I'll leave it there, guys. That's the end of the video. You can see the rejection here the first time. Do not be afraid of this rejection. This rejection is beautiful. It's fantastic, and I'm quite happy for this to drop. I've went over previous targets, where we can drop. The lower the better, in my opinion. But this needs to form this structure and allow price to be able to break cleanly above the 50 weekly moving average, which will coincide with the next breakout on the daily moving averages. So anyway guys, 20 minutes. It was hard to get that video done a bit quicker, but I think it's just vitally important that we understand this and understand that the moving averages in relation to the bottom of this market. Bitcoin bull market is setting up, in my opinion. No, we're not there yet. It needs time to build the structure and build the support to base off so we can make that run. Anyway guys, I hope this helped, and please like and subscribe, and if you have any questions you can hit me up on Discord, and thanks for watching. Have a good day.